Listen up, because this ain't your grandma's investing advice. We're diving headfirst into the wild world of market sectors. You see, the stock market isn't some monolithic beast, it's a jungle out there, folks. Different sectors roar louder at different times, and knowing which ones are ready to pounce is your ticket to big-time gains. We're talking about building a portfolio so diversified, so rock solid that even a market meltdown won't shake you. Alright, let's talk tech, baby. This sector is all about the future. We're talking smartphones, artificial intelligence, cloud computing, the whole 9 yards. It's the engine of growth, the disruptor, the game changer. When the economy is booming, tech stocks soar like a rocket. But remember, what goes up can come down. This sector can be volatile, so buckle up. Now let's talk about the big dogs. Apple, Microsoft, Nvidia. These companies are the gorillas in the room, the ones calling the shots. They're constantly innovating, pushing the boundaries of what's possible. If you want a piece of the tech pie, these are the names to watch. But don't get it twisted, this sector isn't just for the big boys. There are plenty of smaller, nimbler companies out there making waves. Keep your eyes peeled for the next big thing, the next game changer. That's where the real money is made. Remember, investing in tech is a long game. You gotta be in it for the long haul. Ride out the dips, hold on tight, and you'll be rewarded. Now, let's talk about a sector that's about as close to recession-proof as you can get: healthcare. People are always going to need medicine, treatments, and healthcare services no matter what the economy is doing. That makes this sector a safe haven in turbulent times. We're talking about companies like Johnson & Johnson, Pfizer, United Health, the titans of the healthcare industry. These companies are cash cows, generating steady profits year after year. They're the bedrock of a diversified portfolio. But don't think for a minute that healthcare is boring. This sector is on the cutting edge of innovation, with new treatments and technologies emerging all the time. We're talking about gene editing, personalized medicine. The future of healthcare is here. And let's not forget about the aging population. As the baby boomers retire, they're going to need more healthcare services than ever before. That's a tailwind that's only going to get stronger in the years to come. Hold on tight, because the financial sector is a wild ride. Banks, insurance companies, asset managers, these are the companies that keep the money flowing. And when interest rates rise, their profits soar. Think of it like this. Banks borrow money at low rates and lend it out at higher rates. The bigger the difference between those rates, the more money they make. Simple, right? But here's the catch. When the economy slows down, so do the financials. People and businesses borrow less, defaults go up, and profits take a hit. That's why this sector is considered cyclical. It's all about timing. Now let's talk about the big players. JP Chase, Goldman Sachs, Bank of America. These are the titans of Wall Street, the ones calling the shots. They're the ones who benefit most when times are good, but they're also the ones who get hit hardest when things go south. Alright, let's talk about the fun stuff. Consumer discretionary. This sector is all about the things we want, not the things we need. We're talking about cars, clothes, vacations, entertainment, all the things that make life more enjoyable. When the economy is booming and people are feeling good, they spend money on discretionary items. That's why this sector is a great way to play an economic upswing. But here's the thing, when the economy takes a turn for the worse, consumer discretionary is often the first sector to feel the pain. People cut back on spending, and companies like retailers and restaurants feel the pinch. So, what are the key things to watch in this sector? Keep an eye on consumer confidence, employment numbers, and retail sales. These are all indicators of how much money people have to spend. Now, let's talk about a sector that's about as close to recession-proof as you can get: consumer staples. These are the companies that make the products we use every day, no matter what the economy is doing. We're talking about food, beverages, household products, the essentials of life. Think of companies like Coca-Cola, Procter & Gamble, Walmart. These are the giants of the consumer staples industry, and their products are always in demand. People still need to eat, drink, and clean their houses even during a recession. That makes consumer staples a defensive sector, meaning it tends to hold up better than other sectors during economic downturns. Now don't get me wrong, consumer staples isn't the sexiest sector out there. It's not going to make you rich overnight, but it's a solid, dependable sector that can provide stability and income for your portfolio. Alright, let's talk about energy, a sector that's as volatile as a Texas oil well. This sector is all about one thing: the price of oil and gas. When energy prices are high, energy companies rake in the profits. But when prices drop, watch out below. Now, the energy sector is undergoing a major transformation right now, with the rise of renewable energy. Solar, wind, hydro, these are the energy sources of the future, and they're only going to become more important in the years to come. But let's not kid ourselves, oil and gas are still the king and queen of the energy world, and they're going to be for some time. So, if you're looking to invest in the energy sector, you need to be comfortable with volatility. This sector is not for the faint of heart. But if you can stomach the ups and downs, there's potential for big profits in energy. Chapter 7. Let's talk about industrials, the sector that builds the world around us. We're talking about manufacturing, aerospace, defense, construction, transportation, all the industries that keep the global economy humming. When the economy is strong, industrials thrive. Businesses invest in new equipment, governments spend on infrastructure projects, and the demand for industrial goods soars. That's why industrials are considered a cyclical sector, meaning their performance is closely tied to the overall economy. Now, the industrial sector is facing some challenges these days with rising interest rates, inflation, and supply chain disruptions. But there are also some big tailwinds, like the increasing demand for renewable energy infrastructure and the ongoing recovery in global trade. So, if you're looking for a sector with a lot of moving parts, industrials is a good place to start. Chapter 8. Let's talk about materials, the sector that digs up, mines, and processes the raw materials that go into everything around us. We're talking about metals, chemicals, lumber, paper, all the essential ingredients of modern life. Now, the materials sector is cyclical, meaning it's heavily influenced by the ups and downs of the global economy. When demand for goods is high, materials prices rise, and these companies make a killing. But when the economy slows down, demand for materials drops, and so do their profits. Now, one thing to keep in mind about materials is that it's a global sector. These companies operate all over the world, so you need to pay attention to what's happening in China, Europe, and other major economies. If you're looking for a sector with the potential for big gains, but also some volatility, materials is worth a closer look. Just remember to do your homework and understand the risks before you invest. Let's talk about utilities, the sector that keeps the lights on and the water running. These are the companies that provide essential services like electricity, gas, water, and sewage treatment. Now, utilities are considered a defensive sector, meaning they tend to hold up better than other sectors during economic downturns. People still need to heat their homes, turn on the lights, and flush the toilet, even during a recession. That makes utilities a relatively stable investment, with steady earnings and reliable dividends. But here's the thing. Utilities are not known for their growth. They're regulated industries, which means their profits are limited. So if you're looking for a sector that's going to make you rich quick, utilities is probably not the place to be. But if you're looking for a safe, stable investment that can provide a steady stream of income, utilities are worth considering. Let's talk about real estate, a sector that's all about one thing: location, location, location. But there's another factor that's just as important: interest rates. When interest rates are low, borrowing money is cheap, and people are more likely to buy homes and commercial properties. That's good news for real estate companies, which see their profits soar. But when interest rates rise, borrowing money becomes more expensive, and demand for real estate cools down. That can lead to lower prices and lower profits for real estate companies. Now, the real estate sector is vast and varied. It includes everything from residential homes to commercial office buildings to industrial warehouses to shopping malls. Each of these subsectors has its own unique risks and rewards. If you're thinking about investing in real estate, it's important to do your homework and understand the specific risks and opportunities of each subsector. Let's talk about communications services, the sector that keeps us connected in this digital age. We're talking about telecom giants, cable providers, internet companies, social media platforms, and entertainment conglomerates. This sector is all about communication, information, and entertainment, and it's only getting bigger and more important in our lives. Now, the communication services sector is a bit of a mixed bag. Some companies, like the telecom giants, are mature and slow-growing. Others, like the social media platforms, are still in their growth phase and expanding rapidly. And then there are the entertainment companies, which are constantly evolving to keep up with the latest trends in streaming, gaming, and mobile content. If you're thinking about investing in communication services, it's important to understand the different subsectors and the specific risks and opportunities of each. But one thing's for sure, this is a sector that's only going to become more important in the years to come. There you have it, folks. The keys to the kingdom, the insider secrets to unlocking the power of market sectors. Remember, diversification is key. Don't put all your eggs in one basket. Spread your bets across different sectors to reduce risk and maximize returns. And most importantly, stay informed. Keep up with the latest market trends, economic data, and company news. Which sector are you most bullish on? Let us know in the comments. Like, subscribe, and share for more stock market insights.